Attention all Canadians, your financial world is about to change, and I've got the inside scoop for you. The Bank of Canada held its overnight rate. Stick around to find out how this impacts your real estate investments and housing needs. I'm Andrew Hollandchuk with the Sims Real Estate Group powered by eXp Realty. And today, we're diving into the Bank of Canada's latest announcement. Don't forget to hit that like button, comment with your thoughts, and subscribe to stay up to date with essential updates. The Bank of Canada has just revealed its decision to hold the overnight rate at 5%. But what does this mean for you? Well, let's break it down. Over the past 12 to 18 months, we've witnessed a relentless series of rate increases, hitting Canadians hard with higher mortgage payments. For some, it's even forced them to consider selling their family homes. But the big question remains, how will this affect the real estate market? On a side note, I wanted to express to you how interest rates have impacted some of my clients. Sadly, one of my clients who became a widow with 2 young kids with the higher interest rates, when her renewal came up in the last 9 months, she could not afford her home anymore. And I'm absolutely shocked that the Canadian government has increased rates so dramatically and at the highest points in so long. They knew the impact it would have on Canadians and how it will impact not only them financially, but their home life and in so many different areas. The positive is we did sell our home, but sadly, she no longer has that family home. It created so much of a dramatic situation for her, the stress, the sleepless nights. So again, you never know what your neighbor is going through, your friends or family, so don't forget to check in because we're all in this together. In the Bank of Canada statement, they acknowledge that higher interest rates are putting a damper on economic activity. They anticipate weak growth through 2024. On the topic of inflation, the bank sees little sign of it slowing down, with expectations on average of 3.5% until mid next year before targeting 2% in 2025. Bank is also concerned about price stability, citing rising inflationary risks. This means they're prepared to raise rates even further if necessary. They may increase rates more. Come on, guys. They increase rate more. It's not only going to cripple the economy, but imagine when you went from a 2% mortgage rate and now you're going to be going into a much more higher interest rate. For some people, it's doubling their mortgage payments. And it doesn't matter where you are in Canada, if you have a $300,000 mortgage or a $200,000 or some have $1 million mortgage, every person is impacted so greatly. They're going to have less purchasing power. They're going to be spending less. So they're going to be not going to be supporting the local businesses. So the government is going to have to do better. And we got to hold them accountable. So what's the takeaway? A slowing economy coupled with stubbornly high inflation levels complicates the rate outlook for the coming year. While the bank has hinted at the possibility of more rate hikes, our bet is that these high interest rates might briefly push the economy into a negative territory, further impacting consumer spending. There you have it. This article came from the BCREA, which is the BC Real Estate Association, which is supporting also my outlook and many of my colleagues and all of us fellow Canadians. At the end of the day, we got to make sure whoever we vote for, it makes sense at the next election. And I'm not getting into politics, but we got to make sure that we are heard and we have the right voice representing us Canadians. Another thing that I find that we're very fortunate in Victoria and Vancouver Island and many parts of British Columbia, I truly feel our areas will have the least amount of impact versus most other areas in Canada because there's more eyes in our area. There's more people that want to move here because our climate is one of the best climates in all of Canada here on the West Coast. Therefore, we experience less of an impact. We live on an island. We're very limited in housing, so that keeps the price more stable for us on Vancouver Island, which means traditionally we have higher prices. Now, impact on mortgages. But what about our mortgage rates? Well, brace yourselves. Fixed mortgage rates have hit annual highs of over 6%, and you're not alone in this struggle. The stress test has become even more demanding. We do anticipate some relief in early 2024 as bond markets anticipate future rate cuts by the Bank of Canada. However, once the bank returns its policy rate to a neutral range between 2 to 3%, fixed mortgage rates will likely settle higher than what you've been accustomed to over the past decade. So let's just start wrapping this up. So there you have it. A snapshot of what's happening in the world of interest rates and real estate. Stay tuned for further updates, and remember, knowledge is power. Make sure your voice is heard. If you found this video informative, don't forget to like, comment with your thoughts. You'll never miss essential insights. This is Andrew Holanchuk with the Sims Real Estate Group, powered by EXP. I'm signing off, and don't forget, like, comment, subscribe for more insider tips on the Canadian real estate market. Bye for now.